Former Fraud Squad detective Rowan Bosworth-Davis has said it. The annual Cambridge Conference on Financial Crime has said it, and thousands of people who've lost their homes, their farms and their businesses and their livelihoods have said the financial crime pays, and our banking fraternity is above the law. Most successful banks are often the most crooked, and when they get caught in the act, no directors or senior managers are jailed or even fined. Tonight we hear from one organisation that's bringing the victims together to fight back. That's Jeremy Rowe from Bully Banks. And Jeremy joins me on the line now. Hi Jeremy, welcome to the Politics Show.
Good evening, Danny.
First of all, tell us a bit about yourself. How did you get into setting up this organisation, Bully Banks?
I'm a small business person. I run holiday cottages and run a health spa in North Devon, and I was sold one of these products. I disputed the product.
Sorry, just let me interrupt you there. What kind of product were you sold?
I was sold something called a swap. It's an interest rate hedging product, and the bank sells it as protection, as insurance, as a very low-risk product. And in fact, in the events that happened during the crash, the product became toxic. The costs that came out of the product were out of all proportion to the benefits of the product itself. And I disputed the consequences with my bank. I'm quite an articulate individual, and I was arguing with my bank, not madly successfully, but disputing the issue. And then I came across other people who had been missold the same sort of product, and they were less able to look after themselves, and they were losing their homes, they were losing their businesses, and the product was basically sold at a targeted audience. Generally people over 55, 60, 65, 70, and the product was sold to these people because by and large they had significant property assets, because their life's work were in the property assets that were part of their business. The banks targeted them, and when things went wrong, they went wrong in a very big fashion for them.
Now that's interesting, isn't it? But would you say that possibly that these products, as you call them, these deals basically between the banks and borrowers, were prepared with some kind of foreknowledge, maybe even, that there might be some kind of problem with the banks?
For 3 years now in public that there's what I call a conscious process of deceit. And I have no doubt at all it was deliberate, it was systematic, people were very aware of what they were doing, and deceit was involved, deception was involved, because if the product's true risks are explained, there is no small business person who would enter into them. In very simple terms, if I talk about a million, I mean, some of these products are for much smaller sums, but a million makes a very nice round figure. The bank came to you. The bank, prior to coming to you, had calculated that there was a risk in this product of perhaps 250,000. It calculated that risk. It called it a contingent liability, put it into its books. It reduced your borrowing capability, but didn't tell you about that risk. It sold you the product, often through someone who's introduced as an advisor. In fact, he's a very highly paid commission salesman. He sells you the product, no disclosure of this risk, no disclosure of the impact upon your borrowing ability, no disclosure of the cost of exiting the product should you need to. And very often to people, say 50, 55, 60, they sold a 15-year, 20-year, 25-year product. And obviously, to business people in that situation, life events are a real fact of life. Illness, death, divorce, all sorts of things happen, and there was no disclosure by the banks of the consequences, the cost of exiting this product should you need to.
Well, look, Jeremy, I mean, the banks are going to say, well, sorry, tough, you should have read the small print.
That's what they do say. One of the things that we're told is, you took a bet. In reality, no small business person knew they were in the bookmakers. They thought they were talking to their bank as a trusted advisor, and that isn't what happened. And the banks do rely on the small print. There's no question about that. But it is outrageous that they seek to rely on the small print. For any individual, they can't rely on the small print. There's sufficient protection out there. For a small limited company, they do rely on the small print. But in truth, we are working our way through that. We are dealing with the small print that the banks rely upon, and we're dealing with it quite successfully.
One problem with this, of course, is that we go to independent financial advisors hoping that they're going to be independent. Now, you've just made a pretty strong accusation there that that these people are actually salesmen for the banks. Now, there will have to be some sort of commission, surely, for an independent financial advisor. Otherwise, they wouldn't even talk to you.
No, these are not independent financial advisors. These are people who are employed by the banks. So your bank manager, your relationship manager says, Jeremy, I can't advise you about this, but I'm going to bring someone down from our Treasury Department, a bank employee, who is going to advise you. The whole process is to emphasize the nature of the banking relationship. We, the bank, we're here to advise you, we're here to protect you, we're here to nurture you, we've got your long-term interest at heart, and then they sell a toxic product, and they sell it so that they can make money. There's no dispute at all. There was a much more appropriate product available. The banks didn't want to sell that because they didn't make any money out of it.
Okay, what about your own personal...
Because he didn't make any money out of it.
What about your own personal situation then? How did it affect you and your family, this? And have you managed to come through it yet?
Well, we are coming through it. One of the things is that as a result of bully banks, the FCA set up a redress scheme.
These are the regulators?
Yes, the financial conduct authorities. They set up a redress scheme, and as of 2 days ago, they announced that up until this time, up until the end of September, £1.5 billion, that's £1,500 million, is being paid back by the banks already to small businesses. There's at least another £1.5 billion of potential cost which has been removed from the small businesses. So you're looking at a return, if you like, already of £3 billion, and that's not enough in the sense that there are a lot of parties who are still not getting benefit. But this is just one product with one set of costs, and sort of 16,000 small businesses are getting redress. There are another 10,000 which need to get redress in respect of that product. And then there are other issues. I mean, one of the things that has surprised me greatly, when we started this, I started it because I had a conversation with someone who was losing their home and their business. And I thought we might end up with, say, 10,000 people in that sort of situation damaged by the product. In fact, there were 30,000. There's another product. There is misconduct in relation to the sale of fixed interest lending, where people are persuaded by the banks, quite deliberately, for the bank's purposes, to change their variable rate lending to go into fixed interest rate lending, and they do it at a moment in time when the bank's predictions are that interest rates are going to drop. And we think there are about 70,000 of those out there. And
I mean, surely that can be considered some kind of insider dealing, because they've got knowledge that the people who are actually making those loans don't have.
It isn't insider dealing in the sense that's a technical offence. What it is abuse of the bank's position. They have the trust of their customers, or at least we say they did have the trust. And what has happened is they've betrayed that trust. And over the last 5, 6, 7 years, a lot of people have realised that the banks are on a frolic of their own, and they're not to be relied upon, they're not to be trusted. But they took advantage of the trust that was bestowed upon them, and that is right at the heart of everything, is that abuse. And it's driven by greed, simple, naked greed. That is what drives the bank's individual staff members, and they have abused the confidence that their customers have in the bank. And I mean, we know there are issues in LIBOR, we know there are interests with PPI mis-selling, we know there's issues with foreign exchange, and all of those have got massive aggregate consequences. The problem with the sale of interest rate hedging products and fixed interest rate loans is, though they have a very large aggregate consequence, for the individuals involved, the consequences are devastating.
Okay, well, tell us about some of your members, because I know you've got a membership on your website, bully-banks.co.uk. Small businesses can pay £200 a year to become members, and large businesses £600. But give us an idea of a couple of case studies that you've done of individual people who've come to you.
If I sort of talk it, rather extract it sort of as general examples, our members, they're farmers, they're owners of care homes, they're owners of holiday cottages, they're owners of hotels, small factories. We've got doctors and dentists who've set up facilities. We have childcare, and we've got sort of landlords, people who are doing buy for let. There's a whole range of businesses out there. The examples, I sort of quickly trip into examples because I've personally spoken to over 500 businesses where people have spent quite a bit of time talking to me about their problems. A couple of ladies running a caravan park, coming up to their early 60s. They actually inherited the caravan park from their parents, and what happened is that the banks came and sold them a product. They didn't disclose the consequence of the product. I mean, these ladies are not financially sophisticated, and they lose everything. They're pawning their jewellery, they're selling their furniture, they've sold their home in order to meet the costs that come with this product. I was at one conference near Manchester, and a guy comes up and sort of in the audience. We'd had a conference, about 300 or 400 people there, and he comes up, and a young guy in his mid-30s, and he sort of talks, and he says, look, I've got real problems with my bank, and he's explaining it, and he had about 50 separate small buy-to-let properties, residential homes, which he said, I bought for about 50 grand, etc. I've got about 50 of them, and he said they're now worth about 150, and so, you think, well, yep, this guy is doing very well, he's been very successful, he's a wealthy individual. And he sort of carried on talking. He said, the problem is I've got this swap. I was sold the swap for several million. In other words, it's a product that's associated with a loan. He's got a loan of a couple of million. He's sold this swap, and the swap, the costs, basically are driving into bankruptcy. And he said, I'm having to sell my properties in order to survive the process. But what happens is when I sell a property, the bank grabs all the money. So I sell a property for 150, the bank just takes the money. So I can't pay my estate agent. The solicitor takes his fees before it goes, but I can't pay the estate agent. More importantly, I can't pay the tax man because I've got a capital gains bill on that.
Sounds like it's forcing people... Sorry to interrupt you, but it sounds like it's forcing people into basically to the law, so that people are then they're going to be made basically illegal. So, that they will be put into debt, etc., and that there will be various people taking them to court. Well,
there are. In fact, the one who takes them to court most of all is the tax man. And I mean, this guy, let me finish the story just very quickly.
Sure, yeah.
At the end of it, and I couldn't understand why the bank is doing this, and then he says, I'm on the transplant list. I've got a heart-lung transplant. And actually, the guy, that guy, he got redress. The bank paid him several £100,000 for a mis-sold product, and he contacts me and he says, Jeremy, many thanks. I've got the redress. I can pay my mum back the debt, and I can sort my daughter out university. But actually, it's too late for me to get a heart transplant now. I'm off the register because I'm no longer in sufficient condition to benefit from that transplant. And you have that sort of personal tragedy. Obviously, that's extreme, but that's the sort of thing which, what I call life events, there's reality out there. All the sorts of things that people take for granted. Illness, divorce, death, etc. in the family, and you have a situation in which small businesses are saddled with a product for many years that devastates their business, and while that's happening, all their life events are taking place around them.
Okay, what are you actually able to do for people? Because I understand that you've had some sort of conference get-together over the last couple of weeks, for example.
Yes, that was on LPA receivers. There are a whole series of scandals out there There's the misconduct of the bank's business support teams. There's the misconduct of LPA receivers.
Okay, just tell us about the receivers, because these are the guys that come in when someone tells you, whether it's true or not, that your company is bankrupt. And
those are insolvency practitioners. They're different. LPA receivers is just it's an odd quirk of English law. What happens is when you give a mortgage to the bank on your property, and it can be your home or your business property, if you get into arrears, they can send in someone who takes control of the property. And they're called receivers. And what happens is, because a business that's property has been taken over is generally financially vulnerable, the conduct of the professionals who go in and take over the property is often unchallenged. And over a period of years, these individuals can become, they're not all of them obviously, but individuals can become corrupted, if you like, by the power that they have. And their behaviour can be very distressing for the individuals involved.
So they're like little Hitlers coming in?
You're quite right. It's exactly what it's like. And again, you can think these may be people, with a £100,000 mortgage on a property, and they find they're in difficulties. The property is taken out of their hands by an LPA receiver, and the conduct of the receiver in those situations can become something that is really reprehensible. And with all of these things, what is reasonable to start with, if someone has power and it's unchecked and they begin to think they're above the law, over a period of time their behaviour becomes misconduct, and the misconduct can have tremendous damage, can cause tremendous damage. And that is what we're seeing. In fact, the West Country, I think, is a bit of a focus of behaviour by LPA receivers, which I think should be thoroughly reviewed. If I describe it as misconduct, it's sort of a neutral word. There are allegations that it's much worse than just misconduct, but it certainly requires investigation. And in terms of who should investigate it, ultimately, it has to be the police, the SFO, and that has to be prompted by politicians. And we're out there trying to do our bit in getting the politicians to pay attention to the issue, and we do that by getting our members as a group to go and see their MPs. It's not one or two people, it's 2,000 people across the country going to see their MPs in their constituencies and talking about the issues that are real here and which we require political support. And
okay, Jeremy, I'm going to have to interrupt you because you're set up for small businesses. What about individuals that have had particular trouble with banks? Because I've noticed around Bristol, I was in Stroud a few weeks ago and saw someone had put a brick into the window of one of the Stroud banks. People are obviously getting quite angry with the banks.
I think you're in the wrong tense. I think people are angry with the banks, and it's simply we say to people, come. We've got a website. It's Bully Banks. There's a hyphen in the web title, bullybanks.co.uk. Come, go to the website, read about us, look at what we're doing, and we are trying to help. I mean, there's all of the directors are people who've been missold these products. No one is making money out of it. We've got no political allegiance. We've got no commercial allegiance. We are just a group of individuals. We started very much as business focused. It is broadening. One of the scandals that we have is equity participation, where banks enter an arrangement with people whereby they take a share of the growth in their property. And we have real concerns about the conduct of banks there. Okay,
what about going to put you in the driving seat now in George Osborne's job? If you were sitting there in charge of the economy, looking also, of course, over the entire regulation of the financial markets and the banking system, what would you be doing, Jeremy?
First thing I'd do, actually, is I'd call in the chief executives and the chairman of every bank and talk to them very seriously about what they have to do to resolve the outstanding issues. And there's no question I could run through a dozen issues which require urgent attention. The banks are aware of them, but the banks are much more aware of their bottom line. They're much more aware of their shareholders. In terms of sort of structurally the change, I do think there has to be change in the way the banks publish data about themselves, about the complaints they receive, etc. The Financial Ombudsman Service has to have its authority increased quite significantly, and that requires a growth in the FOS. The FCA's powers have to be extended. They have to change the way in which the courts work on these issues. For example, gagging orders. They're abused woefully by the banks to create a precedent which is adverse to the customer and protects the bank.
Now, George Osborne, actually the taxpayer, owns great shares in some of these many banks.
Oh, yeah.
Why is he not doing these things?
I think there is a mythology which the banks help to perpetrate. The banks present themselves in a way to government which is that the banks are businesses which are terribly, terribly successful and you can't afford to damage them. The most important thing about the banks is that they have control of our currency, our money, and the whole economy. All of the thousands and thousands and thousands of businesses which employ multitudes more than the banks, who are absolutely essential for this country in terms of what they produce, they depend upon the money, and the banks have the money in their control. And if you strike out the money, I mean, the banks are not responsible for making widgets or making cars or computers. They have control of our money. And they have a different social responsibility because of that. And one of their social responsibilities is to moderate their remuneration. The only reason these people pay themselves such exorbitant amounts of money is because their remuneration is determined by bankers and not by ordinary people. I mean, I'm sure you have a pension fund, I have a pension fund, but I don't manage it in reality. Bankers manage that fund, and they are the voice of the shareholder that determines, yes, the bankers can pay themselves more money. Yes, these bonus payments are appropriate. Look at the banks. Look at what proportion of their net income is paid out to their employees in the way of bonuses. It is fundamentally wrong that those individuals are entitled to that level, that proportion of remuneration compared to what the shareholders receive.
Amazing, as well, as we were hearing earlier on, it looks like they're killing the economy in the process.
I think there is a major structural inequality in the economy. You asked what I'd do if I was George Osborne. I'd actually grow up. I'd turn around, I'd look at what the hell's going on in this country, and I'd say certain things have got to change. And one of the most important things to change is the conduct of the banks, and you have to change it in a very fundamental way. The banks are driven by greed. And again, it's not... I don't think I'm a better man than a banker. What I think is if you put a banker and you put an individual like me into a situation where the rewards are extraordinary, it's likely that our behaviour will be the same, because we are all motivated by money. Do you know what I mean? That's a fact of life. And you have such massive reward going to the banks, totally unprincipled, totally exceptional, and their behaviour changes, their conduct changes. They disregard the normal, if you like, ethics which should govern the way in which we relate to other people. It is, I suppose I'm a grandfather, okay? I've got a certain distance on these things. Money's a lot less important to me than it was when I was 20, when I was 30, etc. There's no question I could see myself corrupted by the vast amounts of money which these bankers pay to large numbers of their staff.
Okay.
And it is an issue for this country. It really is an issue.
Okay. That was Jeremy Rowe. Thanks very much, Jeremy.
Okay,
from Bully Banks. Your website is bully-banks.co.uk. Yep. You have a helpline as well that people can call.
Yes, we do.
Do you have to be a member to call the helpline? Let me just give the helpline number, Jeremy. It's 01202 701 047. That's 01202 701 047. And do you have any events coming up in the next couple of weeks?
Well, what's happening, quite interesting again, is we've got our fourth parliamentary debate. We've been in the House of Commons twice and the Westminster Hall once. We've got another debate coming up about the issue of the misconduct of the banks, and that will take place at the end of October, early November. It's been prompted by the all-party parliamentary group, which was set up because of the missale of interest rate hedging products, and Gitta Bebb is the chairman of that group, and he is, with his colleagues of the group, prompting for another debate. And this is really specific about the failure of the Financial Conduct Authority to do its job, to properly regulate the banks and to provide appropriate redress when a clear, undisputed misconduct occurs by the banks on a grand scale.
OK, Jeremy Rowe from Bully Banks. Helpline again, 01202 701 047. Thanks very much for joining us on the Politics Show.
Thank you very much, Tony. Cheers.
Getting bigger by being better. The number one choice for Bristol. This is BCFM 93.2.
Martin Summers, old Labour Oxford economist. What would be your fix for the banks if you were in George Osborne's position? Because it does seem that they're not really using the public shareholding to discipline them.
No, well, when you had the Labour government and even more with the coalition, the view was that these were basically private sector institutions, and that if the government was to intervene in these institutions, it would undermine the whole wall that there's supposed to be between private business and the public sector. Pretty bizarre if you think about it. But in other words, although the government is a majority shareholder on the board of RBS, they deliberately designed the situation so that they wouldn't have any influence, because that would send the wrong signals to the City of London and so on and so forth. And if you think of the kind of during the crisis, the Labour government was desperate to avoid nationalising the banks, so they didn't want to do it. Whereas in actual fact, if they were actually true to their original principles, they would have regarded it as an opportunity to take the banks over and do what they wanted with them. But of course, they didn't want to be seen to be doing that.
Is it just as simple as George Osborne not being tough enough to stand up to these guys?
Well, George Osborne represents their interests, so he's basically their shop steward. So that's why he does what he does. It's because that's what he's there for.
And is there ever any chance, do you think, of banking becoming a utility where money is there to actually serve the population rather than to enslave us?
Ellen Brown's got the Public Banking Institute, I think it's called, in the US, and the Bank of North Dakota is her model, and that was set up in 1919.
OK, but what about here? Any chance of banking becoming a proper utility again, like it should be?
Well, not this side of the crash, but of course the crash is coming. We were talking in the first hour about the reform of the banks, and I think that reform is by the by now. There's going to be a crash, and then we will see what we're going to do.
Made in Bristol. This is BCFM 93.2.